Thanks, Wayne. Thank you very much. Let me just put my specs. Thanks. Thank you. Thanks for the introduction. Pleasure to have everyone with us on this D16 clinic. This is our 5th clinic. We started with the first one at District 10, and then we went on to 15, went to D19, D28, and this is our 5th run. So the reason why we want to do like a clinic session is because we want to come to every particular enclave, and then we speak a little bit about the market here. So we hope that tonight will be a fruitful evening with everybody. So our first speaker was our partner with solar panels. We hope that you had a fruitful session with them. Now, what's going to happen is that at the end of today's session, there's going to be some charts that will be with our landed consultants. You can later interact with them and then send them an email. They'll be very happy to send you the PDF. So this is a D16 research report that was just out of the oven. So later on, you can also scan the QR code to download it. So quick disclaimer, everything that we are going to share in this cafe, basically, I think one understanding that we want to have is that a lot of them come from our PRB research team, a lot of them from our groundwork, as well as our experience over the years. So do make an important, informed decision before you want to invest in any property, because this is one of the biggest decisions of your life. Now, quick introduction. We started with a couple of big events in the last 2 years. This was a new launch convention. We're going to do this in July this year as well, and Suntech. This is specifically focusing on new launch condominiums and how to hunt for disparity and opportunities. So we had about 1,000 people came last year, and then we started, of course, last year also we had a landed convention. This year we're not doing a landed convention, but perhaps we'll do it next year, which was the reason why we want to run all these clinics with you guys. So we started going around different estates in the last 6 months, and of course the next one, very likely, we're still thinking maybe it should be D21 that we'll be going to. All right. Now, if this is the first time we are meeting, if you have seen a little bit of our content, but maybe not too much understanding about some of our investment frameworks for our webinars, let me just give a quick context on some of the general principles that we adopt. And this has helped our clients over the years, especially when it comes to landed property investment. Now, one of the key things that we want to always talk about is really demand and supply. Of course, demand and supply is no new thing, but when it comes to landed property, there's a very important behavior that we want to understand, is that when we look at that general residential property stock, Singapore now has about 1.2 million public housing apartments, and then of course we have about 370,000 condos, ECs and apartments. Landed property remains at about 78,000. It has maintained over the last 15 years. So if you look at the supply, landed supply grew by about 10% in the last 15 years. Now, where did all this increment came about? They came about largely because of legacy land. For example, Bukit Sambawang has some legacy land at the Luxus Hill area. But if you notice, the recent launches at Poland Collection, Nim Collection, no more 999 years. It's all 99 years because Bukit Sambawang has to convert agricultural land into landed residential, and SLA did not award 999. All right. There's also been a lot of subdivision. So, but meaning that the Mui Kin land plot is still the same. It's just that they have been subdivided. So all these small little increment over the last 15 years did not really increase the supply. So this is something that will give us an insight into some of the certainty when we look at landed property investment. Condo supply grew by about 96% in the last 15 years. Every year, government land sales accounts for about 10,000 units. So our government is very stringent now with land supply for GLS, but it is predominantly reserved for high-rise apartments. There's no more new land for landed, all right? So this is the first principle that we adopt, is that the harder the asset is, the better preservation of wealth. Quite similar to some commodities like gold. Very little increment over the years. Of course, in recent years, Bitcoin, there's only 21 million Bitcoin. Similarly, there's only 78,000 landed properties in Singapore, all right? Sorry, 73,000. Now, so this is basically the scale, 1.2 million. I name it as very elastic. Elastic means that the moment supply increase, there's going to be some level of pressure on price increment. All right, so supply always comes in to fill the gap when price runs up too fast. Similarly for condos, government sort of direction is to let it grow steadily, but it cannot be too fast because it cannot be priced out of the aspiration of Singaporeans. All right. So we are in, of course, a country that has been, I wouldn't want to use the word calibrated, like election just over, right? But it is an aspiration to go to a harder asset for a lot of Singaporeans. And of course, when it comes to landed property, 73,000, I name it as the most inelastic asset in terms of price to supply ratio. So an econs term, inelastic supply, is that when price increase, there's no new supply to come in to support or to lower the price increment. All right. So that is also one of the reasons why landed property prices has grew strong. In fact, if you look at the article that HProp published yesterday, I didn't have time to put it in. This is the first time that landed property land prices has surpassed $2,000 per square foot for land price. All right. Later, if you want to have this, we can give you. This is a tabulation of all 73,000 landed properties in all districts in Singapore. Good for decision making because one of the second framework that we always adopt is that when I want to buy a particular type of landed property, be it a detached, semi-D or terrace, I try my very best to buy into a district or an enclave with a little bit more of that kind. All right, I try not to buy something with very little of my type. The reason is because landed properties also follow transaction volumes. So for example, if you look at certain streets, some of the streets, maybe over the last 10 years, nobody buy, sell, nobody tear down and rebuild. It is actually not very healthy for the valuation. I love to look at landed property streets with a lot of variations, especially across the street, people tear down and rebuild, buy and tear down and rebuild, because when they rebuild or if developer buy, subdivide and rebuild and sell, it's going to bump up the valuation of my street. So importantly, I want to hunt for certain enclaves with a little bit more type of the house that I'm hunting for. All right. So when you look at District 15 and 16, I would say in summation, District 16 predominantly has a very good number of semi-D homes. And today's context, I want to focus a little bit more on semi-D homes. And also just to give like a context, right, is that I'm going to speak from a perspective that all of us, I'm going to assume all of us here is trying to hunt for opportunities in District 16 landed property as a buyer point of view. So I'm not going to speak as if I'm a seller. I'm going to speak as if I'm hunting for something, all right? So I know that over here, perhaps 50% of you already own landed property. Some of you are exploring to get into the landed market. I'll do my very best to share contexts that are relevant to you, okay? So coming back to this, 73,000 at the end. So in totality, in the entire Singapore, there's about 10,000 detached homes, 22,000 semi-D, 40,000 inter-terrace. One of the key general principles is that inter-terrace always belongs to the most liquid form of landed properties, the most easy to buy, easy to sell. So anybody that owns inter-terraces, you'll find that the ability to sell or the speed to sell is always faster. Once you head into semi-D and detached, the speed to exit sometimes becomes a little bit slower. Later, I'll talk a little bit about the buying power that comes with it. So we follow three main principles. First thing, when we want to invest in a landed property, we always look at the disparity effect across the condition of these properties. So basically, we form this 4 benchmark called category 1, 2, 3, 4. This is pertaining to the age of the structure of the landed home. All right. And just to give a visual image, usually what we talk about when we talk about Cat 1 homes, these are homes that are meant to be tear down and rebuilt. Largely single-story house, very old, more than 40 years old. When we look at Cat 1 homes, we only talk about the land price. All right, so we will be very sensitive about the land PSF because we are not buying the structure. We are going to tear it down and rebuild it. When we talk about category 2, these are homes that can sustain for a little bit longer. Perhaps a 2-story classic pitch roof with maybe 3 bedrooms plus 1, but it's not fully built up. Ceiling height quite low. Old structure, pillars, and of course car porch having pillars. But I can A&A or I can actually improve it with renovation. We call it category 2, about 20 to 40 years old. And this, we also try our very best to look at land price. All right. Now, when it comes to category 3, these are usually homes that are less than 20 years old. Some of them modern, full glass with lifts or without lift, but usually it's already fully built up very suitable for renovation. Just spend 300,000 to 500,000, I can move in. And Cat 4 will be from developers. So why is it important we look at this? Because when we buy Cat 3 and Cat 4 homes, we look at the land PSF, but we also consider the build-up, right? So we try to go for mega build-up, maximize the GFA, our bang for our buck, all right? But Cat 1 and Cat 2, we look very strictly at land PSF. So category 1, for example, category 2, 3, and then you have the brand new ones from developers, okay? Now, the last thing that I want to introduce before we head in to talk about some of the opportunities is we look at the DNA of the land also. So this is pertaining to land. Cat 1, Cat 2, Cat 3, Cat 4 is pertaining to structure. This is pertaining to land. Why? Land is an inherent factor that you cannot change. So when you buy the land, you cannot change the position and the facing of the land anymore. All right. And why do we look at the DNA is because when we have a good DNA land plot, in future when you value add to it by renovating A&A and rebuild it, it becomes a stellar horse. All right, it becomes very strong, even stronger. When you buy a poor DNA house, not saying that it's wrong, but provided you get it at a good entry price, you can still enhance it. We call it an enhanced horse, which can still sell. But you have to be very clear with this so that when you make an offer, you know your negotiation position, all right? Later at the end of this segment, when George comes in to share very specific case studies, which I think will be very helpful for you, we'll give you these two lists. One is to future-proof your landed purchase. One is a list of things. We have 24 things to try and avoid, but it's impossible to avoid all 24 things. Max I've seen is to avoid at least just 16 items, all right? So let's just maybe do a very quick roundup of the purpose, right, of really even looking at property investment or landed property. I think the main thing in today's market, because our price is already very different, we are very high now. We are much higher than Shanghai, we're much higher than Hong Kong. I think we're one of the highest tier cities already in the whole world. The rental game is already passé. All right, when I started real estate 18 years ago, a lot of my investors buy for passive income. Now nobody does that anymore because your rental cannot cover your installment. All right. So we always want to have two things. One is that it must have the appreciation factor. Number two is that when we want to sell and exit, it must allow us to have ease. We don't want to be stuck with something that is trapping our equity. All right. Now, this main thing can only happen if you fulfill the previous two things. That means your property appreciates. There's ease of exit, because what you want to do is that whatever property portfolio you have now, you want to be able to create a liquidity event. All right, you can press the button to create a liquidity event. You can also press the button to switch to a next stronger asset. But you can only do that if you have ease of exit, if you buy the right thing. Okay, so we adopt a framework first approach. We'll look at macro, micro, selection strategy. Today we're going to talk a lot more about micro, especially for D16. And then with that, then we think about what to buy, which particular enclave to buy. All right? Okay, so this is basically for families that are thinking, basically like if you are thinking about whether you want to come into a landed property market, why do you even want to do that? So we adopt this principle that we do our very best from 25 to 55 when we have active income running our business, doing our professional work. Try our very best to funnel it into an asset. Because why? That asset is going to serve you once you hit 55 to 85. And this is the most risky income, be it your business, your job, because we have age limitations as well, all right? And of course, like loss of active income is prevalent in a lot of macroeconomic cycles. And once you hit 55 to 85, this is going to be gone. But we want to be able to hit a portion whereby we can have a very good asset income. So let's have a look at this particular family that we always refer to, right? So why is it that from a HDB property, they switch to a condo portfolio, and eventually now they own a landed portfolio as well as an investment condo property. So now they are at stage 4 and 5. They own these two properties. Total portfolio size is about 6.2 million. But the main intent is that they want to own one of this and one of this, all right? And so that when Daniel and Sherry and family, when they reach the age of 65 years old, now they are coming to about 40 already. Their landed property is worth about 4.5 million. This is just based on a 2% growth year on year, non-compounded. All right, just by very simple inflation, non-compounded, no asset inflation. And if, let's say, they fully paid by 65 years old, they are sitting on a $6.5 million equity, zero mortgage. And of course, what's going to happen is that this could be one of their plan, which is to funnel into 4 different buckets. First, of course, they can pay off a condominium, $2 million, just to get a 3-bedder. By then, if you're 55, 65, you can just buy something that has a balance lease of 40 years, Mandarin Gardens or whatever it is, right? And then you buy off another rental property, no mortgage, generate a rental, passive income, just put in DBS, $8,300 per month with your $2 million portfolio, liquid liquid cash at about 500,000. You still own assets of 4 million to pass down to your kids, but you have a passive income generation of about 13,000. All right, so that's their general plan. If they want to press the button earlier for a liquidity event at 55, clear off the mortgage, asset value, equity, and sorry, this is just another example. But similarly speaking, they can also funnel into 4 different buckets. Okay, so quick sharing for today. We're going to talk about D16 opportunities now. I will share with you some key charts later as well. And then George is going to come in to share a little bit about case study. Our partner has already shared part 4. Now, D15 is a larger district. It has 65% more landed properties. But one thing that is very similar is that if you look at basically the semi-D category, it is quite similar in terms of quantity. Okay. However, because of the demarcation of the district, because of the strength of the district, there's always price disparity. So I'm going to introduce you a concept today. It's called the big brother and the small brother. All right. So D15 is like the big brother. D16 and D14 are the small brother. All right. And the behavior is that sometimes the big brother moves a little bit faster and the small brother has not caught up yet. And when the small brother has not caught up, this is an opportunity for investors to look at it because it will eventually go back to equilibrium. There will always be a same amount of equilibrium gap between the big and small brother. But at this point in time, based on our research, we realize that the big brother has moved up too fast over the last few years. Okay, so it's time for the small brother to shine. All right. And D16 has about 171 transactions in the last 12 months from May 2024 to May 2025. Average transacted price is about 4.6 because there's of course a lot of movement for inter-terraces as well. So let's have a look at the generic D16 map. So D16 occupies the space all the way starting from Bayshore, and then of course it hits towards the tail end of Bedok Reservoir, coming back to this portion here, and then we close off at the upper Changi Road area. All right. However, just to break it down a little bit more, we start off from the Bayshore region over here. So basically you have Sernet. This is a high sloping land ground. And then of course you move to the Q Estate, Limau, Bedok Ria, Eastwood area, Bedok Walk. And of course now we are at the Peakview area at Didat. All right. So this is the first portion. And then of course when you move to the second portion, this is where you have Jalan Ayin Laut, you have Harvey Crescent, Sunbird, and then you move on to Meragi, Eastview, and Seagull Walk. So you have these few particular enclaves over here. Now, of course, when you look at D16, it's rather big, all right? And based on popularity, there are certain kinds of popularity. Later, we slowly deep dive into it. But end of the day, every enclave has its own audience, all right? It's a matter sometimes about your entry price that is very important. So when we look at this, this is basically the key comparison between 16 and 15. So D15 has a total of 9,000 overlanded plots, and then D16 has about 5,800. And let's talk a little bit about the semi-D homes using our disparity effect, okay? So what is disparity effect? It's the big brother and small brother theory, all right? And for example, when we were doing the D28 clinic, this is how we usually plonk in the categories to hunt for disparity between the different types of inter-terraces. Now, at current state in May now, at this point of speaking, these are the asking ranges for D15 inter-terraces. Okay? So D15, homes that are meant to be tear down is between $4.2 to $5 million if you try to hunt for something in the market. Recently, Christina and Jess Lee, they are outside one of our landed consultants, they conducted a landed inter-terrace at Carmel. It was quite shocking because That home, I think valuation is at about 4.2. They did a one-day open house, 26 groups came. Cat 1 home, and the whole road was jammed up. And then they received 9 offers in the evening. It was sold at $4.6 million. 2,000 square feet, very mega-sized, longish inter-terrace. That belongs to a Cat 1 home. Now, in my perspective as a buyer, I think Cat 1 home, the owners are asking a little bit higher right now. It is a little bit overpriced, all right, in my context, all right? So I'm speaking as a buyer's point of view, because when I want to buy something, I become very stingy, right? But if you want to sell any properties, we can sell any properties, right? We'll find a way to position your properties. But when it comes to buying, I'm a little bit more strict. So Cat 4 homes go all the way up to $6 to $9 million. Some of them are very mega big inter-terraces. Now, when we look at inter-terraces, we try to buy the correct size, all right? So one key thing about inter-terrace, most of them starts at about 1,605 square feet, because the minimum requirement is 150 square meters. But of course, when you go to the east, there are some landed properties at 1,004, 1,005 square feet. But at best, if you hunt for inter-terraces, try not to go for mini landed. All right, so for example, at Upper Thomson, Jalan Hari Raya, there are mini landeds at 900 square feet and 1,000 square feet. MacPherson has 900 square feet. We try to avoid, all right, because these are the outliers, all right? We try to go for a more standard size, 1,006, 1,008 plus minus. But we also don't want to go for too big. We don't want to go for 2,000, 2,002 square feet, because it will cross to the next class of corner terrace and semi-D. Because semi-D starts at 2,152 square feet. So we try not to go into a cross boundary, all right? Why? It will cause confusion for my next buyer. Because when they want to buy my inter-terrace, they will think about, should I just buy a semi-D, okay? Now, semi-D prices, D15 now, category 1, you will be able to find 6 to 7 million. Category 4, all the way from 9.5 to 15. Of course, D15 has a range of strength all the way up to Mountbatten and Goodman areas. There's more expensive, more classy, right? Of course, the tail end, Opera, is the lowest quantum, but Opera is very close to Bedok already, all right? So these are the range of prices for semi-D now, category 2, category 3. And then when we look at D16 inter-terraces, 3.8 to 4.5, you can find category 1, category 2, 4.5 to 5.5, cat 3, and then cat 4, okay? And then for semi-Ds, 4.5 to 5.5, you can still find 5.5 to 6.5 category 2, homes that are more renovated, 6 to 7.8, and then cat 4, there are some very low content. You will notice why is it that sometimes brand new for developers, the price is about the same as the resale market. Is because developers buy bigger detached, subdivide. The land is an entry-level land, 2,152 square feet or 2,002. So the land is smaller, the quantum is smaller, okay? So if I want to put it together, last year in 2024, 16 being the orange color bubbles, 15 being the purple color bubbles, all right? 2024, it looks like this, all right? And then in 2025, it became like this right now, all right? So when you see this movement here, the big brother has moved up quite significantly, because previously, if I want to buy D15 Cat 3, maybe I can still, if I want to buy D16 Cat 3, maybe I stretch a little bit more, I can still get a Cat 3 in D15. But now I cannot already, all right? Now, I have a budget of Cat 3 for D16, I can only buy Cat 2 in D15. So the bubbles has shifted up pretty significantly this year, okay? And what is going to happen next year is that I forecast is going to look like this. That means there's going to be a little bit more balance. That means D15 might still go out a little bit, but there's resistance already. I can feel the resistance on the ground, because very hard to go for entry quantum, semi-D or inter-terraces, all right? D15 might still go out a little bit more, but I believe the small brother will catch up. All right, a lot of people are starting to hunt right now in the small brother district. Example, D19, last year moved up too much. Now people are buying D28. Last year, D15 moved up too much. Now a lot of people are looking at D16. So I believe you will shift back up. The equilibrium will be a little bit more balanced. All right. And so this is the final chart for this year. All right, 2025. Okay. You can also get this from our consultants later. Now, there is also some pressure from the bottom. Okay, what is the pressure from the bottom? It's pertaining to the new launches pricing, and also the resale condo sellers are asking for future price. All right, so a lot of resale sellers now, because they are always thinking, if I sell, what can I buy? It seems that I cannot buy anything, so I need to ask a higher price. Okay, so the buying power triangle for condos usually peak at this apex here. Once it hits 3.5 million, the buyer starts to go into a dilemma. What is the dilemma? It will come from here. So they will always think, I got $3.5 million. Can I stretch to 4 to go up to maybe a cluster landed or an inter-terrace? They will always think about that, because maybe somebody has a buying power of 3.5 million, but they're hunting for a 4 to 5 bedder. But it seems that every 4 to 5 bedder is also $3 million. Might as well stretch a little bit to get like a freehold property. Okay. There's some disparities between the zones as well. So if you notice, usually when somebody, maybe they're looking for a new launch, 99 years, a 4 or 5 bedder at 3.5, they will also start to think, should I don't touch this, go for a cluster landed freehold, and then maybe I stretch a little bit more, get a freehold inter-terrace. Okay? So this is the bottom-up approach. The pressure comes from the bottom. It comes from the resale condos, the newer TOP, the brand new launches, and then people start to hover into the strata landed, into the inter-terrace. So because of this bottom-up pressure, inter-terrace usually rise up when there's a lot more pressure coming from the quantum perspective. And of course now, if let's say the top perspective from the semi-D is also moving upwards, then what's going to happen is that this gap will then start to lengthen in the next 3 years. So sometimes when we look at this, considering what we have just shared from the start to now, the harder asset classes until what we're shared till right now, there are usually opportunities in every season. So let's say, for example, if you're thinking to get into the landed market, this might be a good kind of season for you to look into it. All right, so let me just come to the first case study, okay? Now, first case study, if you want to hunt for landed, always take note of land plot sizes. Very, very important. Some of you here might be keen to go into detached properties. These are some of the ground kind of feel that we're getting in the last 2 years. So just take note of this. If you want to go for detached, it might be safer because now prices are not low. Look for detached with subdivisible capabilities. Okay? Subdivisible means that if I buy a detached now, I might not need to do anything. I don't have to subdivide myself. But at least I own a subdivisible detached land plot that in future, somebody that buys over can subdivide. Why? Because I want to have one more buying audience. Okay? So recently we just launched this Springleaf. I just give you an example. All right? So this is a huge detached plot, D26. Anyway, D26 is a small brother, but it's also rising up, okay? So as long as you have that ability to allow the next buyer to subdivide, you're owning a very good plot of landed because there's a lot of options. And when it comes to options, how do we usually think about it is that even if any point in time you want to press a button to subdivide yourself, you can always build 2, sell 1, take the profit, offset your own. All right, so your own semi-D that you're staying is in, right? You can just take the profit and offset it. It becomes cheaper for a brand new house. Okay. We recently sold this to a developer. So basically, this is subdivisible into 2 corner terrace and inter-terrace. Okay, so when you sell to certain developers make decision pretty quickly. They have their own architect team. And one of the key reasons is because when you go into detached, the quantum is very high. If you're only depending on future retail buyers and investors, sometimes the speed to exit becomes a little bit slower. But when you open up to developers, you have an extra set of buying audience. So this is just for people who are thinking about detached homes. Always try to hunt for subdivisible land. Now, let's have a look at the second case study. So which one will you buy? Maybe just have a look at this. Let's say you're contemplating between a detached and a semi-D. All right, so you saw a semi-D here at D16, $7 million, 3,005 square feet, 325 square meters, with 10 meters, That 32.5, okay? And then you saw a detached $9 million, bigger land, 4,306 square feet, 33 meters depth, 12 meters width. Which one will you buy? Difference about $2 million. Maybe take a minute to ponder. No right or wrong. Why? Because you can always tell me that I love this. I just love the land plot. I love the house, right? There's no right or wrong. But if let's say we come from a value perspective, one thing to note is that if you're buying entry-level detached homes, semi-D sometimes could be a safer option. Why? Let me share with you. It's because after you set aside the setback, the internal space looks the same. All right. So when you go for entry level, I call it entry level because minimum plot size 400 square meters. All right. But actually, if you look at the depth, there's no difference. 33 meters, 32.5 is the same. The feeling is the same. The width is sacrificed with 2 setbacks at the side. Of course, the back also has 2 meters setback. Front car porch 7.5 meters. All right. But what I'm talking about is that the internal width feels exactly the same as a semi-D, and you can save $2 million. All right. So this is just an example. Try not to be very emotional of having that detached status. We have a lot of owners that own mega size semi-D. They can convert to detached, they don't convert. Because when you convert to detached, you lose more build-up area. They maintain as a semi-D, all right? So even though this is a higher status, but sometimes when you want to sell, when a buyer walk in, they say, hey, why does it feel small? All right, you don't want that kind of thing when you want to sell. So this is just something for you to take note. Also, take note of the buying power triangle. I call this basically the first, the pristine landed tier. Take note for small brother district. The moment we hit past 9-10 million, the so-called exit speed starts to lengthen tremendously. All right? Because why? The big brother hasn't really go up a lot yet until like everything is 10 over million, 10 over million, 10 over million, all right? So when you buy into a small brother district, you want to take note of basically this apex triangle. So we try our very best to keep within $8 million, especially for semi now, you can still find something at 5 plus, 6 plus, very safe entry, but we try to cap it at 8, all right? So same perspective of a buyer, right? If you own something more than 8, I'm not saying that your house cannot sell, all right? But I'm just saying if you want to buy something, we try to keep it within this range. Why? More than this range, so I give an example. I buy something at $8 million now. I value add it $1 million A&A. 3 years later, I want to sell. I want to sell at 11, 12. My next buyer will think, 11, 12, should I go D15? Should I go D21? Should I try to hunt for something in the core central region? So you get all these kind of objections already, all right? Now, let's talk a little bit. Okay, so this is the dilemma zone that I'm talking about. Basically, once I cross 8, they will start to look for a big brother kind of district. Okay, so try to take note of this. Let's talk a little bit about charts. Okay. Now, charts are boring, okay, but charts give us a lot of insight sometimes. So I've broken it down to basically some of the explanation that when you take home with you, easier to understand. So this is the current market inventory. We extracted everything from Property Guru. We try to sift out all the duplicated listings. These are the current number of listings in the market, all right? So there are 384 listings of semi-D. Inter-terrace, 92 listings, detached 90, corner terrace 65. Now, my rule of thumb, I try my best not to touch corner terrace, okay? If I want to buy inter, I purely buy inter. If I want to buy bigger, I go semi. I try not to go sandwich class unless it is a very good deal, okay? Unless it's a very good deal. What does this show us? If you're hunting for semi-Ds, you have negotiation power because there is a lot more listings in the market. I believe based on the pricing mechanism now, there's a lot of opportunities here, but there are chances to step up good deals in D16 now. Now, we are also seeing lessening of below $4 million. But of course, this includes the entire Property Guru. But we only sift out 999 years freehold properties. We don't sift out basically all the 99 years property. All right. So take note in basically D16 area, there's there are batches of 99 years landed property. Okay. 99 years landed property, perfect if the buyer has a limit of up to $3 million, they are in a dilemma between a condo and a landed, which is all fine because we call this the pivot home strategy. That means you just want to buy for space. It's not so much on investment, all right? But when it comes to investment, as much as we can, we try to avoid 99 years. We have this framework called exit before 65. Because once you hit below 65, you will start to see the weakening of your valuation. There's already a batch of 99s landed. I think they have about 10 years left. They're all going for below $1 million, all right? So don't test the SLA system. It will really go to zero, okay? I think for condos, 99s is safer. Landed 99 years, more risky. Why? Condos 99 years, even though left 40, 50 years, still have a big audience because there are retirees that wants to buy, okay? Single level floor plate. But when it comes to 99 years landed, your audience will shrink tremendously. And you also cannot tear down and rebuild. It doesn't make sense, okay? So basically, Terraces, you can see that the asking quantum is also moving upwards. Corner Terraces, not a lot of listings, but there are still listings between $4 to $6 million. Semi-Ds, this range I think is very attractive. 5 to 6, very attractive if you can get something. Most of them are category 2 homes. You need to A&A, you need to renovate, but you can buy based on the quantum price, get the land first, all right? In future, you can do something about it. Detached, we try our best not to touch anything from this range onwards, all right? The quantum is a little bit high. Of course, a lot of them are brand new Cat 4 homes, but to me, the quantum feels a little bit high over here, okay? Of course, if you can get something around this range, by all means, all right? About $7 to $8 million by all means. So, Terraces movement, basically there's a reduction for listings below 5 million. There are increment in terms of people asking $6 to $7 million already for Terraces. All right, this is rising price expectation. Corner Terraces also dwindling, asking listings below $6 million. Now the stability is about here, about 5 plus to 6. Then basically for semi-Ds, amount of listings increase basically for $6 to $7 million. So sellers are also asking between that range, but you can still find listings around 5 to 6. So this 5 to 6 listings pool, I believe it will be absorbed maybe in the next 12 to 18 months, okay? Because a lot of buyers are hunting for this category. Inventory movement, these are for detached, and then of course transaction volume. Terraces still led the volume. Basically between 1st Jan to 1st Jan 2025, okay? So terrace houses are always the most liquid. Okay, so landed property price index, I don't have to explain much on this, but transaction volume based on what we've seen, D16 now ranks top 5, all right? It used to not be the case. It used to always be D15, D19, D15, D19, but D16 has risen up basically in the last few quarters based on what we've seen. So it just shows some popularity in terms of strength. And D15, naturally, it will always continue to outperform. This is for the detached segment. But then D16 now has a little bit more undervalued property, all right? Okay, so I will just move past this. Okay, so D16, this is a chart that you can have a look at along the years. Now I think D16 semi-Ds, which is the focus for tonight, there's a lot of advantage that you can hunt for. Okay? Okay, let me move basically to this part. Okay, let me invite Josh up. Come, Josh. Let's give him a round of applause. So Josh is going to share with you some specific case studies. So Josh, later when you come to the page of the what to avoid, what to buy, let everybody take photo. Okay.
Sure.
Okay, come.
Okay, thank you, Melvin, for catching me a bit unprepared. Okay, so what we're going to do is we're going to dive deeper in terms of the numbers, just to showcase to what Melvin have talked about. So let's dive deeper in terms of the pricing for detached semi-D as well as inter-terrace within District 16. So in this chart, you can see 3 different lines. The blue line would then be District 15, which is a big brother, and then District 16 is a red line. Why we want to look at District 19 is also because District 19 has the highest volume in terms of the landed transaction. Right now, detached is hovering at about $1,000 PSF gap, and the gap is widening. This for detached. For semi-D, it is hovering at about $600. So transaction volume hasn't been very high for all the landed properties within District 16. We'll touch on that later on. Terrace has been steady at about $200 since 2023 until now. So that is the price trend for detached, semi-D as well as inter-terrace. When we try to claw the data from URA, what we notice is that there isn't really a lot of new sale that is happening in District 16. Part of the reason could be because maybe what we envision is that the developer holds a property and then after that sell it and categorize that under the resale category, hence it couldn't be reflected over here. But based on what we understood when we transacted a few units, especially selling some to the developer, all these units have already been transacted, and what we are seeing right now is that in fact the volume is increasing. We sold one plot in Meragi, and then further down the road along Jalan Pergam is also the same developer that actually bought up the unit. The exact reason that they mentioned is because District 15 prices have moved up and they want to start to move towards the District 16 area. So I'll show you some case study over there. Let me just share in terms of what is transacted between the resale and the current asking. So resale, as per what we've seen just now for detached, is hovering at about 1,002. Asking is close to about 1,100 PSF and upwards. Some are of course asking as a higher price point, purely because maybe their land size are on the smaller side, hence the asking PSF is high. But we all know asking is always asking, right? So semi-D is transacting at about 1,004, asking from 2,004 to 3,006. Lastly, for terrace, right now is at about 1,008 in terms of the transacted. So if you take a look over here, we break down into three different categories: inter, semi-D, as well as detached, and then comparing that against the black line, which is the overall market. So terrace house naturally is already trending on the higher end in terms of the PSF, but again, the opportunity lies in the semi-D as well as the detached. Transaction volume, District 19 always lead in terms of the volume, followed by 28, 15, and then lastly 16. Just want to bring your attention to the transformation that is happening in and around this area. So if you're not too, by now I believe all of you should be very familiar. This is the entire Bayshore plan. So what's going to happen right over here is, this has already been cast in stone in terms of the URA master plan. 10,000 homes right over here, 7,000 HDBs, 3,000 private property. The first plot has already been launched and concluded. So you can read the article that's written in-house by us and what this means to this entire area. PSF had already transacted at 1,388 per square foot per plot ratio. Just to give some context, this per square foot per plot ratio, unit rates is already higher than the unit rate that is concluded at Zion Road. So just to give some context, this is District 16, Zion is then of course in the core central area. Estimated launch price could be anywhere from 2006 to 2008. We believe 2008 will be a bit too high in terms of the overall spectrum, and that might be the ones that is facing towards the seafront. But of course that also comes with the road noise. There's going to be a few more plots. My opinion is that because the plot over here actually attracted about 8 bids. Subsequent plots might not be so many, I think, in view of the economic situation right now, because this was concluded actually before whatever tariffs that is happening right now. So there's subsequent plots, but I think it's interesting to see how the plots over here will then set a high pricing benchmark. If you estimate, say, at about 2,700 per square foot pricing, based on the new harmonized floor plan for about 4-bedder, which could be averaging at about 1,150. Overall price quantum for 99 years, 4-bedder could be in the range of about $3 to $3.1 million, and that will be on a 99 years freehold, 99 years condo. Just now Melvin talked about the subdivisible plan. So for this particular plot, this is in District 19. When we marketed this plot, price quantum was high. Majority of the buyers, again just to reinforce, is that buyers that are looking at this type of plots are usually maybe number one, builders themselves that are able to leverage in terms of the cost and then they buy. Eventually we craft out a plan and then we sell it to the developer. Right now this is the draft plan that they have already gotten the approval. So this is going to be launching into the market. Inter terrace hovering at about 6.8 to 7 million asking. And then for the corner terrace, they are all going to be asking at about 7.7 to 7.8 million. So we are still ironing out the details. So once the detail is out, we'll be helping them to market for this landed property right over here, which also means that this is going to be setting a new price benchmark if it does go through. So we're going to take a look at the landed framework. So this is the category that Melvin talked about. Why we want to be talking about this one is extremely crucial. This particular land plot is in District 20, transacted at about 3.3 million. In my opinion, I think that is way below market valuation. Why? Because it's facing substation and then facing the T-junction. But what is interesting is that few months later, the neighbor that is just 3 houses down sell at about 1.16 million more. So that's about 30% higher. So there's a lot of opportunity cost if number one, you didn't market yourself, or you didn't know what are the things to expect when you buy into a property, and that could be missed opportunity cost. This is the next one that we're going to talk about. Has been marketed for quite a while. Took the owners quite a long while to sell. Corner terrace, but the land size is too big, 5566. So again, context, 5566, it can give you a land plot of a detached plot. This is a corner terrace, odd shape, and at the side of the house, it faces at least 4 to 5 back of the terrace house. So it's not too ideal. Eventually, we managed to sell to a developer. I'll touch on that later on. This is far-flung out in the area that majority of the people might not know. This is at Jalan Bambong. Yeah, I saw some question marks. So this is at Kranji. So great, fantastic condition, category 4. But again, because of the location and the lack of amenities, very hard to sell. Lastly, on the naked eyes, majority of the homeowners or buyers might not know what are the things to look out for, right? So for this particular plot, there is drainage reserve. So what this means is that when you want to go into the rebuilding work, there's going to be a lot more intricacies that you need to submit for approval. You know, you have to follow and comply to additional agencies' requirements, and this actually sell below valuation. So I think as a seller, you want to sell as high as possible in the shortest possible time because you want to leverage on any opportunity cost. So this is the few houses that actually move pretty fast. So this is original condition in District 20. Yeah, so 5 offers. This is great location. You can walk to the MRT station. It is 1 km to good schools. So managed to sell with 5 offers and then sold it in 2 months, even though it's in original condition, Cat 1. Similarly for this, this is in District 15. Of course, the land size is big, but that area limited supply, so in 1.5 months at $4.5 million. Same for this particular plot. So at a pretty, so in 1 day basically, so 2,300 PSF, quantum-wise is at about $4.06 million. So in our analysis, what we usually do is we have these documentations that will help to look at a few key pointers. Every house have their pros and cons. So what we usually do is we look at what is current asking, assume closing, and then from there, our main objective is if you want to buy into a property and you want to be able to sell in future, it must fulfill a few criteria. That means number one, the kind of money that I'm putting in to increase the overall investment, I want to be able to increase the category, at least increase the bedrooms or increase the bathroom, because that will allow me to widen the audiences. And then I need to be able to eliminate some cons, and then I increase the pros. So when we take a look at this holistically, we will then be able to compare how does the overall quantum as well as the PSF compare with some of the category 4 or some of the brand new house. If let's say today you buy into something that is say 7 million and you have to sink in say at least 2.5 million, bring your total cost to about 9.5 million to maybe a Cat 4, but maybe there's already something that's about 9.7 to 9.8 out there in the market, then do you want to spend that kind of 2 years to go into rebuilding? And rebuilding might not be so straightforward. So we always advocate our clients to say that before you embark into that journey, not just on a search journey, but you also have to talk to a few architects and builders to ensure that you understand their scope well and where does their responsibility lies. So these are the lists that we actually compiled. So what I'm going to share with you is a few key transactions that took place. This is at Jalan Angin Laut. Took us about 1.5 years or more to sell. Why is that so? It's also because the land size and the build-up is beautiful. It's not too deep into the enclave, but the challenging portion is that you have 2 split levels. First splits from the car porch to the living area, which with about 9 steps. From the living to the dining at about another 9 steps. The multiple splits doesn't allow the next buyer to easily reconfigure. If they want to install the lift, there's no way that they can install the lift on the ground level. They still have to install at the second split level, number one. Number two, there's no way that they can flatten. The only way that they can flatten is to tear down. If they are going to tear down, that means they are viewing it as just a land price. If they're going to tear down on a sloping land, that means they need to ensure that at the back of the house, there's going to be a strong retaining wall to build the supporting structure to support the house at the back. So this took us a while, which also means that we want to share this kind of perspective to you when you're hunting. So cheap and PSF low doesn't mean that it's good. This is a case in point. Of course, when the owner bought it, they purely buy for their own perspective. They want the garden for their kids. But when it comes to selling, it comes with a lot of roadblocks. PSF is low, 1053. What we eventually did was we come up with this lender report. We invested, I think, close to about $2,000 to come up with this report. This is the triangular plot. Land footprint is big, but the building footprint is actually very small. So what we did was we speak to an architect, we redraw the floor plan to say that you can potentially on paper subdivide this into two subject to URA approval. We get the costing out, we pitch this to the developer, and what the developer do is they actually embark on the design that they actually subdivided, and this is the land plot as well as their asking price. Right now they're asking at 2.3 as well as 2.6. 2.3 of course is the odd shape one, and this is the current setup. So naturally when you have a plot like this, at the end of the day what you want to do is when you buy, if you can find a plot, of course, that is regular, that can allow you to subdivide, then you can increase the buyer's audiences. Otherwise, you might face a difficult time, and that will actually lengthen your exit horizon. So this is what we actually did, and eventually we managed to sell to the developer. Right now, they have actually torn down, and then they are in the midst of building up, and that will be the price nowadays. And this is the exact developer that we spoke with, whereby they are moving their focus from D15 towards D16 purely because D15 the prices have run up a lot, and then they view more opportunity in District 16. And of course for developers, most of the time they look at the per square foot pricing, and then that's why they enter into here. So there's still quite a lot of opportunities in around this area. So we have a few listings that is on our hand, and of course some of the new builds that is happening in around this area, Palm Road, Fidelio, Dollar Corral. So some are in, of course, District 15, District 16. All these pricing are good for you to use it as a reference so that you can really see how the price varies from District 15 to District 16. Yeah, so we have all these frameworks, but of course, if you want to find out more, you can always feel free to scan and join our club for more updates. We have our monthly webinar that you can, of course, feel free to subscribe. We don't just talk about landed properties, but also a lot on other various topics as well. And if you want to find out more, you have the books right outside. And we have all these tools that are in our website, so you can just feel free to utilize the tools over there. And last but not least, if you want to get a report, you can just feel free to scan the QR code right over here. Otherwise, you can speak to any of our consultants later on. And of course, for our consults, we do have various packages that you can go for. And with that, we've come to the end of our session.